Welcome for today's webinar about the private pension plan and possible tax savings. This one is the second in a series of webinars we started this week. So the first one was yesterday. It was more global overview about how to save on taxes. Tomorrow we will talk about different possibilities of protecting your family and get some tax savings. And on Friday we'll talk about the famous home savings plan in Luxembourg. Let me introduce myself very quickly. My name is Patrick Malger. I am one of the founders of Taxx.lu. Taxx.lu is online since 2018 and helps everyone to file their tax return online here in Luxembourg. All along of the webinar, you see on the left side of your screen a QR code that you can scan with your phone, and you can schedule right away a call with one of our experts to talk about your potential tax savings. When we are talking about tax savings, we are talking about tax optimization. Basically, it's what does it mean? It means that you can deduct on the Luxembourg tax return different expenses, and those deductions can give you allow you to save on taxes, and the degree on how much you could save depends on your revenues. We are coming to that in a second. So what is the amount of taxes you could save with tax optimization? Basically, it depends on your income, on your level of income. So for example, if we are taking the example of a single with a gross monthly salary of 3K, that person would save more or less 26% of every deduction. And a single with 5K of gross monthly salary would already save more or less 42%, and someone having an income of 10,000 euros gross salary per month would save more or less 43%. What does it mean? But basically it means that if you are deducting 1,000 euros on your tax return, your tax savings will be 430 euros. So always 43% of what you are deducting on the tax return. So what are the possible tax deductions? Basically, on the Luxembourg tax return, you have two main categories. The first one is called special expenses. Here you can deduct, for example, interests you are paying on loans, on private loans, for example, insurance premiums that you are paying for your car, for your home, private pension plan premiums, that's what we are talking about today, or also contributions to a home savings plan. On the other hand, you have what is called allowances. There, the most common one is the cost of childcare and domestic help. Childcare is, for example, the crèche you have to pay for your kids, and domestic help could be a person that you hired to clean your home, or it could also be invoices from a cleaning company that you can also deduct in this category. Then you have also extraordinary expenses. Extraordinary expenses are extraordinary, so we won't go into details, but it could be, for example, money that you're sending to your family that is living abroad that has no other income that what you are sending them. That could be, there are different criteria, be deducted. If you have any questions there, just contact my team. All the webinars we are preparing this week will also be available on YouTube, Facebook, and LinkedIn later on, so you can always watch them also a little bit later. So as mentioned, for this week there will be 4. Just follow them on different platforms. So today's topic is the Épargne Prévoyance Vieillesse, which basically is a private pension plan. So what's the goal of a private pension plan? Basically, it's to build up capital, to build up savings for later. For later means here at the earliest at the age of 60. And what is the advantage? Basically, the advantage is on the investments you're doing into a private pension plan, you can deduct them on the Luxembourg tax return, and you can enjoy tax savings. Why should you think about your pension already now? Basically, in Luxembourg, the public pension system, it has a quite uncertain future. So it's not very clear if in 20 and 30 years, the public pension system is still the same than today. And that is why the governments over the last years, they put in place three different pillars of pension insurance in Luxembourg. So on the first pillar, it's a public pension. There you have no choice. Based on your salary, you are contributing to this public pension automatically each month. Then the second pillar, it's the supplementary pension scheme that companies can put in place for their employees. And the third pillar is the one we are talking about today. It's a private pension plan where everyone is free to choose to subscribe to such a private pension plan. So what are the criteria to deduct such a private pension plan? There are a few. For every deduction on the Luxembourg tax return, there are maximum deductible limits. And those maximum deductible limits depend very often on the composition of your household. Here for the private pension plan, it's quite easy. It's 3,200 euros maximum per adult person, because children are not considered in this maximum ceiling. So for example, a couple with 2 kids, each could deduct a private pension plan up to 3,200 euros, so in total 6,400. However, what is not possible here is that one of you is signing up for a contract of 6,400. Here the maximum ceilings are individually, so it's 3,200 for one and 3,200 for the others. For insurances or for home savings plans, that is not the case, but it is for private pension plans. Another criteria is duration. So it's the contract has to run for a minimum of 10 years, and the maturity of the contract is at earliest at the age of 60 and at the latest at the age of 74. Meaning that if you are subscribing today and you are age 55, you can access that capital at earliest at the age 65. If today you are 30, you can access the money at the age of 60. And even at the age of 64, you could still subscribe to such a private pension plan. And the maturity would be after 10 years, meaning at age 74, you could access that money. At maturity, how can you access the capital that is on your contract at that moment? But you have different choices. The first one, and that's basically the one that is the most used, it's you will get the entire money that is in your contract in once. So you will receive a lump sum. Second possibility is to ask for a monthly annuity. So basically they will pay you every month a certain amount of money, or you can also set up a mix of the two of them. There's also taxation at maturity. So when you are getting the money out of the contract, so for example, if you are opting for a monthly life annuity, 50% of that annuity will be tax exempted. If you're opting for the lump sum, and that's what most of people are doing, you are taxed at half of average tax rate. What does this mean? But basically, without going into technical details, a few examples. For example, a couple receiving a capital of 50K out of a private pension plan with a taxable income of 100,000 euros. They will pay more or less 12% on those 50,000 euros. If that couple has a taxable income of 200K, they will pay more or less 15%. And even if they are having a taxable income of 1 million euros, they will only pay 20%, more or less 20% on those 50K they are getting. So maximum tax rate here would be 21% for people having a taxable income of a lot more than 1 million euros. What are your options? With our partner LaLux, so LaLux is Luxembourg's oldest insurance company here in Luxembourg, you have two options. You have the first option is called security, and the second option is called performance. Security option means that you have a guaranteed capital at maturity of the contract, meaning that you will determine today in your contract how much you will get at the end of the contract, a minimum. If the insurance company has good results, there may be an additional profit participation that will apply. Main advantage of the security option is the security. You know exactly today already what you will get at the end of the contract. The performance options, well, the main advantage is the performance. There, your money will be invested each month in investment funds. So you have the choice between 8 different funds you can choose from, and the performance, it depends on the evolution of the stock markets. There's no guaranteed capital. Historically, however, this choice is more has a better return on invest than the security option, but of course there's also some risk. However, here we are talking about a minimum investment of 10 years, and normally if you're subscribing today for a pension plan that you are age 40, it's even 20 years, so it's a very long-term investment, and normally the performance option is more interesting. So as mentioned, you can choose between 8 different investment funds. All those funds have the label Lux flag, which basically means that they are respecting different environment, social and governance criteria. And out of that list of 8 investment funds, you can choose up to 4 different funds. Meaning that if, for example, you are investing 100 euros per month into that contract, you could opt for 4 different funds, meaning that 25 euros would be invested in one fund, 25 in the other, 25 in the third one, and 25 euros in the fourth one, allowing you to diversify the risk of your investment. There are different funds you can choose from. For example, the Uni Nachhaltig Aktien Global, over the last 10 years, they have an annual average return of 9.41%, which is quite interesting. How much will you get at maturity? It depends on first on how much you are investing each month, and secondly on the performance of the different investment funds. So, for example, here orange is an annual average return of 3%. Blue is an average of 5%. So, for example, if you would invest for 20 years each month 266 euros into this contract, with an average return of 3%, you would receive after 20 years 83,814 euros. With an annual return of 5%, you would receive more or less 105k, with a total investment of 64k over the 20 years. If the contract is running for 30 years, you would have invested a total of 96k. And with an average return of 3%, you would receive almost 150k out of the contract after 30 years. And with a return of an average of 5%, you would receive 212k. How much tax can you save over the whole term of the contract? Basically, it depends, as seen a few minutes ago, on your revenue. So, for example, if we take for a single monthly gross salary of 5k, tax gain, as you have seen, would be more or less 42%, meaning that this person, if it would deduct the maximum deductible limit of 3,200 per year, would save each year 1,334 euros in taxes. So, if you would invest 266 euros per month over 20 years, total tax savings would be 26,687. And if you would do the same over 30 years, total tax savings would be 40k. So your gross invest over 20 years would be 64k. And at the end, thanks to the tax savings, your net invest would be 37,313 euros. Meaning that at the end, you really have only invested 37,313 euros into that contract, thanks to the tax gains, the tax savings the government is offering you here. How much tax do you have to pay at maturity of the contract? As we have seen, it depends how you are accessing this capital. But if you're supposing that you are opting for the lump sum, so a payment all in one shot, if you would get at the age after 30 years an amount of almost 150k, then taxes that you would have to pay would be around 27,459. Meaning if you recap, your total gross invest over 30 years. So if you're investing during 30 years, 266 euros per month, your gross invest would be 96k. Tax savings would be a little bit more than 40k. So at the end, the total net invest would only be 56k. Lump sum at maturity would be almost 150k. Taxes that you have to pay 27,500. So at the end, your net capital gain over 30 years would be 65,000 euros. Can you modify your monthly investments? Yes, you can. You can increase them, decrease them, or even suspend them. So, for example, if you would start now with a small contract, let's say 100 euros per month, then later on you can increase the monthly amount you are investing. You can also decrease it. So let's assume you would start with 100 euros and you want to go down to 50 euros a month. That's possible as well. And you could even suspend your monthly investments. So you could stop your monthly investments and maybe go on later. Is this also interesting for expats? Yes. So even if you don't know for how long you will stay in Luxembourg, you can get these tax savings now. And if you would leave Luxembourg before the end of the contract, what you can do is just stop your monthly investments without any penalty. The money you have invested up to that moment will remain invested into those funds. And at age 60, you can access them wherever you're living in the world. So even for an expat that is not 100% sure if you want to stay here in Luxembourg, this makes absolutely sense thanks to the tax savings you can get right now. One question that comes very often: am I not too young to prepare already for my pension? No, because the earlier you start, the more money you will have accumulated in this contract by age 60. So even if you would start, let's say, at age 30, only with 50 euros a month, over 30 years until age 60, the amount that you will have accumulated will be quite impressive already. So it's never too young. Even small bits can make a difference at the end of the contracts. Who will get your money in case of death? So basically you decide. When we are preparing the contract for you, you determine the person, the beneficiary in case of death. So it could be children if there are any, it could be the spouse, could be other family members. You are just telling us who you want to put in as a beneficiary in case of death, and you can also change that later on. So for example, if now today you don't have kids, maybe you will put your spouse into the contract, and maybe in a few years when there are kids, you want to change that this is totally possible. So the beneficiary in case of death will receive the funds that are in your contract at the moment of your death. So a private pension plan is not just to prepare your personal future, but it's also to set up some savings for the worst case scenario. So for example, if you would die, that money goes at the moment of your death to your family. So it's also a good way to set up a kind of a savings account for your loved ones. So how could you subscribe to such a plan? But basically, you have different options. At first, you have to ask yourself a few questions. So at first, how much do you want to invest? So this one depends basically on your personal decision. How much you want to invest. The minimum to open up a contract is 50 euros per month. The maximum is 266 times 12 equals the 3,200 maximum deductible limit. Then you have to choose the option or performance or security. If you are not sure which one to choose, just schedule a call with us and we can discuss it together with you. Then you can choose the dates, the start date of the contract. So basically, if now we are already in November and you want to hit the maximum deductible limit of 3,200 already this year, we can put as a start date the 1st of January. In that case, you would have to pay the first 11 months in one shot, so January to to November, and starting from December it will be monthly investments. And this already would you allow to deduct the maximum deductible limit already in 2023. Another question you have to ask yourself is who will be the beneficiary in case of death. So the children, partner, family, whoever you want. We just need name and the birth date of that or those persons. So best is to just contact us to schedule a call. Then we can discuss your situation and check what we need to prepare your contract. Why should you subscribe now? Basically, it's never too late or too early to prepare your future. Deducting 3,200 euros mean that you could deduct taxes, could reduce your taxes up to 1,438 euros. In the same time, you are protecting your loved ones by building up savings. And if you want to know how much you can save exactly in your personal situation, you can schedule a call with with a member of my team, so we can discuss this together. Or when you're doing your tax return on Taxx, basically at the end of the process, so after having done your tax return on our platform, our system will automatically determine what is your potential future tax savings. So the system will determine what are the maximum ceilings you did not hit, and if you would hit them, how much taxes you could save by hitting them. And then you can also schedule a call with our team, or you can just subscribe to those products online, and we are preparing everything for you. So if you have any questions, just schedule a call. Normally it's a phone call, 10-15 minutes, and we have done an overview about your situation. And if you have more concrete questions, you can also reach out to my team on help@taxx.lu. So that's all for the webinar for today. Don't miss the other ones, and if you have any questions, just come back to us. I wish you a quite good day. Bye-bye.